Hi everyone, it's so nice to be here. Thank you for having me tonight. I'm going to give a quick overview of 500 Global, and then I will be joined by one of my colleagues and we'll have a little conversation here. All right, so just a little bit about myself. So as was mentioned, I'm Christine Tsai, CEO and founding partner of 500 Global. Previously, we were known as 500 Startups, and I will talk a little bit about that. We rebranded a couple years ago. But my background is very briefly. So my entire career and upbringing actually was in San Francisco Bay Area and Silicon Valley. I'm actually even the daughter of a Silicon Valley engineer, so very much rooted in kind of the birthplace of a lot of tech innovation. I co-founded 500 in 2010, and throughout this conversation we'll share a bit about vision for 500 and our learnings over the past 13 years of investing globally. Oh, okay. All right, so a little bit about the 500 Global story. This year, actually just in a couple weeks, we are turning 13 years old, so we'll be officially a teenager. But before, to share a bit about 500 today, I think it's important to start from the very beginning of the firm, which is in 2010. And I'm going to take a step back, talk a little bit more about what the world was like in 2010, both at the macro level as well as technology. So starting there with technology, if you remember in 2010, the internet was obviously really taking off in terms of the big distribution platforms. So if you think about the mobile revolution, iPhone had just come out, Android also was the next big competitor. My background having been at Google for the past 7 years, from 2003 to 2010, during this time, I really saw how much mobile took off in terms of the last big platform shift. Today, many people talk about AI as the next big platform shift, but the last one before that really, I believe, was this mobile revolution. In addition, social media like Facebook, Twitter, YouTube, Instagram, as well as cloud computing, the notion of cloud, hosting things on the cloud, was really starting to take off. At Google, I worked on developer tools, and one of the big pushes was this little airplane engine. I don't think they use this anymore, but this was for Google App Engine. So that was their kind of cloud hosting service. It was a bit far behind Amazon and Rackspace and Azure, but nonetheless, these were all the various trends that were happening. Ultimately, what does that mean? Now, in terms of where the world was in 2010, we were just coming off of the 2008 financial crisis. We saw a lot of changes happening in terms of world economies, as well as specifically within venture capital. And I'll talk about why this was. But particularly in Silicon Valley, there was starting to be this emergence of a new kind of venture capital called the micro VCs. So these were largely angel investors who were very prolific, investing in a lot of companies, and then they decided to start their own firms. Also, diversifying the sources of capital that startups could take. So they don't have to just go to the big venture capital firms. They also could approach some of these individuals who were starting firms. Also though, a lot of the VC activity was primarily US focused. But at this time, venture capital, I think, was really seen as something in English called the cottage industry, kind of very small, still not a lot of big, largely Silicon Valley US. But that would change, of course, from 2010 now to today. But really what this means when I talk about the changes in technology platforms, I had the privilege of working on many of these, working with developers and publishers at both Google and YouTube in the early days. What this meant was the costs to start a company were dramatically lower than they ever were before. So, if you think about companies that would start out in, the early 2000s and such, they would have to raise several $1 million in Series A just to pay for their server costs. But what was changing is that now the computing costs, hosting servers were coming down dramatically. The costs for customer acquisition, for distribution, all of these platforms online, known as kind of the Web 2 platforms like Google search, mobile, Facebook. Those are also much cheaper. So really, to start a company, it was much more cost efficient than ever before, which means that companies didn't need that much money to get started, but what they really needed was help. They needed help to understand how to get distribution on these really still new platforms. If you think about even mobile, the App Store, all of those things were very new channels. And so this is where 500 was born, with that, seeing these trends happening. So the barrier to start a company were coming down. We also saw that globalization, we felt that because of these trends, technology would spread globally, access to information, starting a company, all of those things would enable startups to thrive anywhere in the world. And it wasn't as visible back then, but in the beginning of 500, we really believe that the next big companies will come from all around the world. It will take some time, but the next unicorn company, and that term wasn't invented until 2013, these next big companies would be both in Silicon Valley and around the world. And what companies really needed was a little bit of capital, but also, again, they really needed education, the mentoring, connections, and the community. So that was really our big bet. And I think really believe, and we'll walk through this, in the past decade, this has really proven to be true, that companies just really, at the earliest stages, they need some capital, but they also need a lot more than that. And then this gives a bit of a snapshot that a lot of how we've executed upon this has been through investing in companies at the early stages, but doing much more than just writing a check. We've also helped provide education, helped to bridge the gap between Silicon Valley and many countries around the world. And to date, we've run many programs, over 140 batches worldwide. This has encompassed about more than 2,000 companies. And for us, actually, it's turned out that more than half of these have been programs outside the US. But this is really remarkable in terms of that's where most of the help is needed. Oops, excuse me. All right, so very quickly, in terms of 500 global, and I mentioned before, we were previously 500 startups. A lot of the reason why we updated our brand was to really show that we are a global venture capital firm that helps support founders from the earliest stages, at the bottom of the pyramid, all the way up till they scale their company to pre-IPO or they become a unicorn. So for us, a lot of that foundation is small, seed investment, largely accelerator programs, helping them at the early stages, connecting them to our global community. And then as the companies grow and we see the most promising companies, we continue to partner with them, building traction, supporting their growth. And then as they get to the later stages, really leveraging our network, especially as they look for global expansion. Now, in the 13 years of 500 Global, if you look at all the way to the 2010, this gives you a little bit of highlights over the past 13 years in terms of when we first launched. Again, I mentioned our anniversary is coming up in just a couple weeks. We launched our first fund as well as our first accelerator. Even the office space, we had a very good conversation with the Mitsubishi team here earlier about how important the physical space is. We were very intentional about having our first office space in Mountain View, because at the time, in 2010, Google, Microsoft, LinkedIn, all of those were located really in that area. So we felt it was very strategic to be close to these big tech companies for our founders. Then, as you see through the years, we really leaned into that global vision to expand beyond Silicon Valley to Latin America, Southeast Asia, Korea, Thailand, Japan, MENA, and so forth. And then, today we changed to 500 Global in 2021. We are now based in Palo Alto, and today we are about $2.5 billion in assets under management. So 500 today is a global venture capital platform. We're $2.5 billion in assets under management. We have invested in more than 2,800 companies around the world. This is more than 80 different countries. And then in terms of our winners, More than 45 of our portfolio companies are valued over $1 billion, and then more than 150 companies are valued over $100 million. So unicorn companies and then soonicorn companies. And then if you look at this map, the green is countries we've invested in. The the black pins are where we have investment team members on the ground. So when I mentioned that we are really a global firm, we very much are in terms of having people like on the ground in these markets. It's just another view of our team. Very much a global team in terms of, this is really primarily the leadership, as senior leadership, as well as our general partners and partners in different markets. This is a bit about our flagship fund performance, but big takeaway here is that, in the very beginning, we had a vision to have a kind of a de-risked approach to early stage venture capital. We felt that the traditional venture capital model, where you invest in a small number of companies, very concentrated, that just wouldn't work for this new concept of seed stage. So our view was to build very diversified, broad portfolios. And that has largely been the strategy, at least for the global level. The big takeaway here, again, is that the funds have shown consistent performance over time, and funds 1 and 2 are top decile funds. So, and if you look at these logos, many of them are from outside of the US, both US and non-US. And many of even the US companies have expanded all around the world. So that is very exciting to see that vision of the next big companies will come from outside of Silicon Valley, very much true. Now, before we have our conversation together, I wanted to give you a little bit of 500's history in Japan as well. So our first investment in Japan was actually very early, so in 2010. And one company was called Gango, which was rebranded to Gango and then subsequently acquired. And the other investment in the same year, they're a few months apart, but the other investment was a company that became known as Paydi, which was a very significant acquisition in the last few years by a US company, PayPal. We have invested in about 56 companies to date in Japan. Total capital has been about a little over 31 million. The companies I mentioned, so Paydi is one. It was acquired for 2.7 billion in 2021. This was quite exciting in terms of being the largest global acquisition of a Japan-based startup. This was out of our first fund. And then subsequently, Smart HR was now gained unicorn status after raising a Series D round back in 2010. Oh, sorry, there's a little, okay, so that was it. But we have continued to run with the benefit of some of the partners that we worked with here in Japan, continue to run early stage programs, and we are excited, especially given a lot of the momentum that we have observed over the last few years in terms of really a strong push for innovation, stimulating startup activity, venture activity in Japan. We are excited to continue to contribute to that. So I will ask, oops, it's not working. Okay, so we'll invite my colleague Michelle